Hello, my name is Philip Totaro. I'm the founder and CEO of market research firm IntelStor. Welcome to your weekly dose of truth to power. Truth to Power examines data driven insights for the energy sector with a focus on renewables. On this week's episode, I'll conclude the deep dive of the recent analysis that IntelStor has completed on asset profitability and the impact of O&M on wind farms in the USA. Well, if you've been following Truth to Power for the past few weeks, I've been sharing a very detailed analysis of O&M in the US wind energy market. I'll conclude that deep dive this week by taking a longer look at O&M and the impact that maintenance practices have on maintenance cost, along with a breakdown by maintenance type. This has never been released before, so you're in for a bit of an exclusive. Most people look at O&M data just based on absolute cost per turbine per year. The overall market average, independent of that turbine size, is about $54,000 per year. And you can see that there's a slope of this curve when you break this down by average turbine size. For turbines that are under 3 megawatt, it's pretty steep. The slope for turbines that are 3 megawatt and larger has actually flattened out. While the 4, 5, 6, and 7 megawatt turbines are obviously newer and therefore less expensive to maintain, the real reason for the shift that most turbines in this size range have had is the fact that they've got a service lift that's installed. That service lift has significantly reduced maintenance timeframes for certain types of repairs. But we also want to be able to look at maintenance cost versus asset age in a little while, and you'll see some other interesting trends based on that analysis. Before we get there, I want to introduce the method of how we look at O&M because we've normalized the operations and maintenance cost against the megawatt hours produced. Normalizing maintenance cost this way eliminates the need to look at variation in turbine size, and you can focus on maintenance type and asset age as the major determinants in overall cost. The average cost of maintenance for wind energy assets in the USA is $6.44 per megawatt hour produced. It's pretty clear that as assets age, they become more expensive to maintain, starting off around $5 a megawatt hour and significantly increasing up beyond $10 a megawatt hour after the first 20 years in operation. That shouldn't be a surprise, but it's important to understand this in a bit more context. As assets age, the maintenance cost will escalate at different rates. Some asset owners who run OEM equipment from Vestas or GE Vernova see a typical trend of cost escalation after the first 10 years in operation, and more cost escalation after 20 years in operation as well. I've noted this previously on Truth to Power, and asset owners with Siemens Gamesa may see a higher startup maintenance cost at around $6, but they actually have the lowest cost escalation and scaling over the asset lifetime. Nordex assets do not spiral out of control on maintenance cost versus annual production in the same way that their counterparts from GE Vernova or Vestas do, averaging just a fraction higher in cost than Siemens Gamesa. So, who really offers the best value for money? Well, we looked at asset profitability last week, including a breakdown by maintenance type. But this is where some technical asset analysis comes in handy. As everyone knows, mechanical things wear out over time, as I just mentioned. This can be seen just by looking at an AEP curve of any wind farm. You wait long enough and you will see the what I call hockey stick shape to the annual energy production. That drop off in performance is inevitable, but how long an asset maintains their annual energy production and net capacity factor before showing a drop off in performance can inform project developers which turbines offer the best value. That's also helpful for investors. In some cases, the absolute value of the maintenance cost is not significantly increasing year on year, but the drop off in AEP leads to this normalized maintenance cost metric to show a significant variance. If we look at the average age of a drop off in energy yield from a P50 to a P75, we tend to see an average in the USA of just under 11 years. That's partly due to asset management style, but also varies by the OEM equipment used on different wind farm sites. Some asset owners are deliberately running their turbines into the ground in order to maximize their production tax credit revenue, then repower after 10 years when they can requalify for more PTCs. But since that operational model is slowly going away with the loss of the PTCs by the end of 2027, owners are now looking at who shows the best resilience amongst the OEMs. We plotted that at IntelStor with a breakdown by the OEM equipment, and the results were actually very interesting. Of the OEMs who are still active in the USA, Vestas and Siemens Gamesa offer the best longevity of their turbines before they show a drop off in performance. They're between 10.4 and about 11.8 years before you see that shift from a P50 energy yield to a P75 compared to their pre-construction estimates. GE Vernova has a drop in performance at just under 10 years on average because asset owners like NextEra are looking to maximize their PTC revenue and they're running those GE turbines harder than what they were designed for. In the future, we'll break this analysis down by various factors such as maintenance type to give asset owners and operators the best asset benchmarking in the industry. But you can still see today that the way somebody decides to maintain their assets and the equipment that they have on their project site definitely plays into how easy it is and how expensive it is to maintain an asset. Thank you for joining me this week. I'm Philip Totaro, and this has been your weekly dose of truth to power. Follow us on IntelStor's YouTube channel as well as your favorite audio platforms. And visit www.intelstor.com to join more than 200,000 subscribers to our renewable energy data solutions. A full analysis of the renewable energy market in the USA and the rest of the world is available to subscribers. And you can register today for the next Wind Summit event in Toronto, Ontario, Canada. Visit www.windsummit.org and join hundreds of your industry colleagues to discuss all the latest trends in operations and maintenance. We hope to see you there.